Aloha, my friends. Welcome, everyone. Thank you for joining me for Java on Monday. This is August 21st, 2023. We've got a lot of things to cover this morning, even though it was supposed to be a relatively quiet Monday without a lot of Fed news or reports coming out. We are looking forward to the Jackson Hole Summit later this week. And that's given the markets a bit of a bounce. Right now, they are in the green for the futures. So we're going to have some recovery here. We are watching the 10-year yield. It is right at about 4.3 with its it doesn't like it. And the dollar index as well, the relative strength of it is at 103. We're watching the MMRIs clearly in high risk territory still. 275.5 should have given up a bit and it has not. So we're still watching this. I think this bounce that we're having personally is very temporary, will probably end either by the end of the day or possibly by tomorrow. So right now we're not in a buy the dip phase, but rather a sell into the strength phase of the market. That's just what the technical indicators are showing as probabilities, not financial advice, just passing on what I see in the charts. Some more into the macro. US futures are signaling a bounce, and they're kind of going into this after the slumps. We did have a bit of correction, but I don't think this is going to last. So they are talking about the Jackson Hole Summit ahead. That's not until Wednesday they start having interviews, and Friday when Jay Powell will speak. I think also that they are, again, misjudging Powell because he's saying that they see upside risks on inflation and will possibly lead to more hikes. He's already said there would be one more hike prior to the end of the year. Most likely, he's stuck to what he said before, and that would put pressure on the markets again. So, my opinion, not financial advice, I think there will be one more hike, probably September, before they do a pause. We won't be cutting rates yet. So in the other news tomorrow, we are getting the BRICS summit is taking place. So there's some interesting news with that. They're talking about the expansion, and the Saudis are interested in joining. So as the BRICS grows, they are actually becoming a rival for the G7, not just in GDP, but also with what they've got going with their new development bank. Now, they do lending for these other countries to do their development, and we're watching emerging markets as the US is facing its difficulties along with its friends in Europe. So we'll keep an eye on this, of course. So we've got the major three, in my opinion, that we need to watch that are really getting some stories floating out that they're using for manipulation. First is labor, talking about jobless claims, saying that the jobless claims are declining in the sign of a resilient job market, a labor market. This is not exactly showing what is going on. So, what we're seeing, if you look underneath and dig into these numbers, there are less full-time higher paid jobs and we have more lower paying part-time jobs because companies are kind of sizing down. We talked about this before, sizing down for what is coming for the stagflation and in case they need to let employees go at a moment's notice. So that's not the true tail end. Typically what happens when these recessions happen, the deep recessions, they will let go of a larger number of employees and to support the ones that they want to keep with higher wages. So, second one, housing. Got this article. I do agree with him. We're dealing with a very savagely unhealthy housing market. It's propped up by lack of demand, and the largest number of homes selling right now are new construction from builders who are giving incentives to buyers because basically they're starting the phase where they want to dump them for the most part. So they're paying either part of their down payments, paying part of their loans for the points down to get them into the houses. Coupled with that, we've got Airbnb. The number of holders of Airbnbs surged. And I spoke about this before, that this was a lava kind of a pandemic play that is now in reverse. And as some of these Airbnbs start selling, that will create a glut of supply, and we're going to watch a reverse, a very rapid reverse in the housing situation here in the United States, probably larger abroad, will be contagious. So the third one, the banks. The statement is we think the larger regional banks can handle pressures thrown at them, says Barclays Goldberg. Well, true, the larger ones can, meaning the mega banks. The mid-sized to smaller banks have more pain coming. There will be more mergers, or as they call it, consolidations. Whatever it is, they are the fall guys. They were set up by design by these larger banks back when 2008 happened so that they could be basically dissolved and their assets absorbed easily by the mega banks for pennies on the dollar. So this was the plan all along, to cut the systemic risk by setting up these front runners that will be taken out. Okay, so another thing we need to watch, of course, is China's central bank, because this is no longer a local thing with the United States economy or European economy. They're all interwoven. And so basically, their central bank cut their benchmark rate less than expected. So basically, they've gone into fighting their deflationary phase by cutting their rates, but they left their longer term rates stable. And so what that's doing with their currency is it's still underpinning it. And the United States was expecting that they would let theirs free fall. Remember, we're in a currency war as well. So it's a race to the bottom to see who can devalue their currency faster. So showing the Chinese economy and also watching their labor market. So Larry Summers came out and he's saying that their economy is hitting a wall after years of optimism. Well, ours is also. So right now, all things are relative, and that is the struggle that is going on. So I want to let everybody go as soon as I can before this gets on too long. I wish everyone a green trading day or just a wonderful day in general. Thank you all again for being here. I want to know your thoughts. Please leave in the comments. What do you think about these things that I've gone over? What's your thoughts on Airbnb? It could create an incredible glut of supply of housing on the market. My opinion, do you think that will continue? Do you think it's a possibility? And then also, as far as the rates and Jackson Hole Summit, I'll keep you up on that. Thank you so much. Please share and comment, and I'll see you all next time. Until then, my friends, stay free.